Welcome back to the show, everyone. You're tuned into another episode of Market Moves Today, where we break down the latest action from Wall Street and give you a roadmap for tomorrow's trading session. I'm your host, FX Videos, and today is Tuesday, January 7th, 2025. Grab your coffee, your charts, and let's dive in. Let's start by looking back at what happened today. The major indices had a mixed day, with the Dow Jones Industrial Average gaining 0.4%, closing at 36,540 points. Meanwhile, the S&P 500 slipped slightly, down 0.2% to finish at 4,730, and the NASDAQ Composite took a bigger hit, dropping 0.9% to close at 14,130. So, what drove these moves? Tech stocks were under pressure again today, with renewed concerns over rising bond yields. The 10-year Treasury yield hit 4.15%, the highest level in 3 months. This spooked investors in growth sectors, particularly big tech. On the flip side, energy stocks rallied as crude oil prices jumped 3% to $84 a barrel, following news of a production cut from OPEC. Consumer discretionary stocks also showed some resilience after retail giant Macy's reported stronger than expected holiday sales. That's a promising sign for consumer spending heading into the first quarter. Now, let's zoom in on some specific sectors. First, energy stocks, as I mentioned, were the standout performers today. Chevron and ExxonMobil both posted gains of over 2%. This momentum could continue tomorrow, especially if crude oil remains above $80 per barrel. In contrast, technology stocks were hit hard, with Apple down 1.8% and Nvidia losing 3.2%. Investors are reassessing valuations in the face of higher yields. Remember, higher borrowing costs can weigh on companies with lofty growth expectations. Over in the financial sector, banks had a solid day. JP Morgan Chase climbed 1.5%, benefiting from the rising yield environment. As interest rates go up, banks' profit margins on loans typically improve, so this could be a sector to watch. Finally, healthcare stocks were a mixed bag. Pfizer slipped 0.7% after announcing a delay in the FDA's review of one of its new drug applications. However, biotech firm Moderna surged 5% on positive trial data for its updated mRNA vaccine targeting emerging variants. Shifting gears to breaking news and economic data, the December jobs report came in today. The U.S. economy added 225,000 jobs last month, slightly above expectations. The unemployment rate held steady at 3.6%, while wage growth cooled to 4.2% year-over-year. This data eased some inflation worries, though it's clear the Fed's focus on fighting inflation is far from over. Speaking of the Federal Reserve, Fed Chair Jerome Powell is scheduled to speak tomorrow at the annual Economic Forum in Chicago. Investors will be listening closely for any hints about the central bank's next move on interest rates. Most analysts are expecting another quarter-point hike at the upcoming meeting, but Powell's tone could shift market sentiment significantly. Now, let's talk about tomorrow and what traders should prepare for. Starting with earnings, keep an eye on Delta Airlines, which reports before the bell. Analysts are expecting solid results thanks to strong holiday travel demand, but any guidance on 2025 bookings will be crucial for investors. On the economic calendar, we have the ISM non-manufacturing PMI data coming out at 10 a.m. Eastern. This report will give us insights into the health of the services sector, which makes up the bulk of the U.S. economy. A stronger-than-expected reading could reignite inflation concerns, putting more pressure on growth stocks. As for the broader market, I'd expect some choppiness. Tech stocks might see more selling pressure if bond yields continue to climb. On the other hand, energy and financials could extend their gains. Traders might also see increased volatility during Powell's speech, so keep those stop-loss levels tight. Before we wrap up, let's take a question from one of our listeners. What's your take on the tech sell-off? Is this a buying opportunity or a warning sign? Great question. Personally, I think it depends on your time horizon. In the short term, tech could remain under pressure as the market adjusts to higher yields. But if you're a long-term investor, pullbacks like this can be a chance to pick up quality names at a discount. Just make sure to focus on companies with strong fundamentals and manageable debt levels. Alright, that's a wrap for today's episode of Market Moves Today. Thanks for tuning in, and don't forget to subscribe so you never miss an update. As always, stay informed, stay focused, and we'll see you back here tomorrow. Until then, happy trading.